Thank you so much, Andrew, as always, for that stellar introduction. We are here today to discuss and debate the future of token offerings. And of course, back in 2017, during the ICO craze, the concept of token offerings were so new, and the specifics of whether or not a token was a security or a utility, that was all unknown. So I want to start off by asking my panelists today, has industry knowledge and regulation since then changed how token offerings are marketed? And if so, in what important ways? Peter, do you want to start us off?
Okay. I can give a bit of background. So we look at, I think if you look at security tokens, securitized tokens, for example, we see it as a security. So for us, I think if you look over the last couple of years, you can see the ICO, it was a bit of a fad. And to be honest, I think a lot of the tokens that were issued at that time, they were not, there was a lot of issues with them in terms of trust, and some of them were not actually real investments, so to speak. So I think there was an evolution. So I think people now have a better understanding of what they're dealing with. I think we see a lot of caution as well.
Okay. Caution.
And you see a new term coming out, which is securities, securitized tokens, STOs.
Yeah.
So I think I'll leave it to my other panelists to discuss that as well. But my view is I think the market is slowly getting a better understanding of what it is. And with that, hopefully with better knowledge comes more prudent investment, and hopefully better quality products will emerge. Right?
Yeah, Julian, what do you think are the key learnings there that have increased more caution, more perhaps regulation also in this space when it comes to token offerings?
Yeah, we like to use the word digital securities and not security tokens.
Okay.
You'll notice at this event, there's pretty much no one here anymore talking about STOs. Started in ICO land, failed ICOs, let's try and do an STO. What's the point of doing an STO for a startup that has no value in the S? That's questionable. So huge change this year and the whole blockchain world was trying to sell this liquidity element as the only and the main value of doing this. So with not much understanding of capital markets, regulation, what issuers want, what's a high quality private equity real estate issuer want when they launch a security offering, and most of them had no idea what they were talking about. So, so we also had this rapid development of technology. We also had public blockchains. We also had the development of private blockchains, or DLTs, which is definitely needed in the capital markets. That wasn't really around 12, 18 months ago. So the whole infrastructure is rapidly evolving. 12 months ago, we were the only ones in Singapore talking about digital securities. And then there was this huge wave of events every 5 minutes, and then everyone realized how hard it was because you need licenses and investors. But look, it's getting a lot more positive. We've got 8 to 10 clients we're negotiating with, multi-$100 million offerings, commercial assets, big buildings, big funds. We think the best use at the moment will be digitizing portions of existing assets and funds that return strong returns, and with a key sponsor that's managing the project, so they're more economic interest in accessing rights to these investments, kind of like the public stock exchange. So yeah, look, a world of development, huge positive movements last couple of months. I think next quarter and the following quarter, we're going to start to see STOs, we'd like to call them DSOs, digital security offerings, where the actual quality of the security is really high quality. And then everyone's been blaming the tech on why the STO market hasn't been evolving.
But I'm glad that you mentioned, Julian, the kind of products that you think have the most potential to be tokenized. Taking parts of existing funds and financial assets, I think is a really interesting topic. So why don't we drill deeper onto what products do we see generally tokenized and sold that weren't as popular back in 2017, but are popular now given those innovations in blockchain technology, in regulatory clarity, et cetera. Darren, do you want to speak on that?
Yeah, sure. I think the first thing that I would actually look at in this is blockchain technology is an enabler, but not necessarily a driver of these assets. Ultimately, the driver of what's going to be tokenized comes down to what investors are interested in.
Yeah.
And so, you know, I'm working with a company here in Singapore called CapRidge,
Okay.
and we've worked with them on an offering called One Exchange. It's a private securities marketplace. And while they're working with us to help turn this into a blockchain-based, blockchain-powered exchange, blockchain was not the driver for this new platform. It was market demand for the ability to move in and out of private securities, the ability for investors to invest in a broader class of assets so they could diversify their portfolios, look for different types of returns, whatever it is.
What's the most popular asset with is it Capstone?
CapRidge?
CapRidge.
Yeah.
Actually, I don't know the answer to that. So in their existing platform, they help raise money for a variety of companies.
Okay.
The technology field, financial services, all over the place. And so what we've done with them is create the secondary, we've created the exchange that once a company has raised funds, these are companies that are pre-IPO but kind of post-venture rounds, that those assets can be listed. And so what this is actually doing is it's allowing these investors who are looking for, again, those different classes of assets. So in this case, the first asset listed is a company called Aggregate Asset Management based here in Singapore.
Okay.
And so they're investing in oftentimes overlooked securities, hoping to beat the returns on the broader market. These assets have raised funds to meet their next phase of growth, and then the investors who are participating in that round, as well as those who may be early employees or early investors, can also make use of now this new liquidity that's available to them through the One Exchange platform.
Gotcha. Those are really interesting insights. Peter, would you agree that blockchain is really a platform and these digital securities, tokenized securities, it's not really the asset that they are representing that's the most important, but perhaps the enabler of blockchain technology? Or would you say that SGX really is looking into specific kinds of assets for security tokens, for digitizing them on a blockchain platform? So is it really the product, or is it just the benefits of blockchain platforms that you think is the most important to highlight?
Okay, I'll answer it this way. So I agree with Darren. I think in terms of, it has to be product driven, right? So you think about blockchain as a technology, it's a technology.
Okay.
Right, distributed ledger is a technology. I'm a technologist. We believe that it has tremendous promise to do certain things, but at the end of the day, I think when you put the whole ecosystem together, the blockchain or the ledger is a small part of it. It may power some fundamental infrastructures that, should the technology mature to a state where its adoption is higher. But in essence, I think if you look at financial markets, DLT is one part of the solution, right? So there's a lot of other things that have to line up before a platform can be used. It's about adoption. It's about, in some ways, standards of interoperability. It's about whether
Are there some assets better poised to be on that
yes,
digital ledger
I
platform?
think there's, in my view, there are some assets which are more, so to speak, suitable for digitization or tokenization or whatever we're going to call it, but more than others, which is a function of your client demand and also the type of asset, right? So I think there's a lot of financial assets today that exist still in a very, it's very decentralized. So for example, many types of products in the bonds, fixed income or derivatives, they actually exist in hundreds and hundreds of processes and emails all over the place. So that kind of asset, I would say, lends itself naturally to what DLT is trying to achieve, which is to simplify processes, crush some of the complexities that have been there. So I think that's one area, one way to look at it. I think a lot of the work we've done, even with our central bank, is to explore some of the possibilities that we can apply some of these technologies to solve client problems. I think if you manage to add value to your clients, the platform will be used. The problem is a lot of platforms, I think, today don't add much value. So, so you don't see the kind of adoption, and coupled with the skepticism that people have for digital assets, so to speak,
So-
it's a challenge.
Why don't we talk about a platform then that's doing this already, that is trading digital securities that have transformed existing assets like real estate, private equity, venture capital? Julian, do you want to talk a little bit about what it's like on the ground doing this with InvestAcrowd?
Sure.
Yeah.
So we've launched 25 private equity deals. Every single deal takes a long time.
Okay.
There's always investors that want to get out. We started looking into this 2 years ago as solutions for a real industry, a huge industry.
Yeah.
Securities world's massive. Digital securities, it's the same market. It's already here. So we see a huge use case in private equity funds, later stage financing for private companies.
Yeah.
Changing shareholders, changing stuff, all these kinds of things. So it's still in the first round of primary issuance here. So we're still at a point where governments are issuing companies with paper. And if you think about it, the interesting part is we've gone 1,600 years ago, I think we talked about the first public stock offering, and then we moved to e-securities about in the 1970s. Private markets had paper shares in 1600s, and in 2019, we still have paper shares. We have had zero evolution there. So we're looking at it right now as a private company helping issuers and private equity groups digitize the shares of their next offering. It's still about the quality of the offering, but it now enables a whole lot of more interesting value propositions. We're just at 1.0 of this new movement, where again, it's a Cayman fund or a Singapore SPV, and it's a share representing the same.
Yeah.
But I think already we're starting to work with some clients who are much more forward thinking about 2.0. We start thinking about smart contracts, programmable debt, programmable equity,
Yeah.
new financial instruments, which come over the top of the existing world. So that's where it gets really, really exciting. So there's a lot of different sort of value propositions, but we've got an exchange license under application for secondary trading. My biggest concern there is product. We're one of the first focusing on primary. You don't have anything to trade secondary if you don't have primary. We had a whole bunch of horrible offerings last year. Most of them failed. This year it's changing, but they still need to go through primary before they get into the secondary.
Yeah.
So there's a few, and the first security tokens that launched in the US weren't necessarily the right types of tokens to be trading in an exchange. The whole world of STO land thought the only point of doing an STO so you can trade in an exchange, it's like saying the only point of starting a startup is to guarantee to be listed on NASDAQ. So there's going to be a very small portion of these digital securities that belong in an exchange because a market maker would make them and it's actually the right type of product. The rest of it, much larger, will be private. But you'll now have secondary trading on broker-dealers and OTC, which just wasn't really possible before when you got a piece of paper and you shoved it in the drawer for 10 years and you waited for your investment to finish. So there's a few thoughts. So.
It's a small portion of the portfolio. I mean, Darren, do you agree or disagree with the idea that digital securities won't actually replace entire existing financial portfolios, but will perhaps be a small portion of, the existing books of the big institutional players, SGX, BlackRock?
I look at it differently.
Okay.
I don't think investors invest in digital securities because they are digital securities. They invest based upon whatever their investment strategy is. So when I look again at the way the market's shifting and where interest is, it's still more driven by the product. And then it's up to us technologists to figure out, okay, what's the most efficient, most effective way to do this? And so when I'm actually looking at the digitization of, securities, there's a large extent to which securities are already digital, But in the case of assets that are not already out there trading today, blockchain makes a really, really interesting substrate that you can actually build new markets on top of. And so the core value proposition that we're really working with at Consensus is we believe that Ethereum public networks can become kind of the global settlement layers for all things. And so
For all things.
For all things. All the things, as Joe likes to say. And so when we're looking at this technology, what does that actually mean to have everything on one ledger? What does it mean to have cash? What does it mean to have securities? What does it mean to have other instruments on one ledger that can then interact with each other, move from platform to platform, et cetera? I mean, you're already seeing that in the Bitcoin space and many of the crypto markets today where I can actually take my Bitcoin from Coinbase and move it over to Binance or to Bittrex or to whatever it is. And so if you start to see if you start to move these assets onto a common ledger, they all follow a common standard, a common protocol, that's when you can start to possibly make more efficient markets because you can compete on different grounds.
I like how we keep coming back to technology, and it's good to know that we have very knowledgeable technologists here. So one of my concerns with blockchain as a technology, and one of the common misunderstandings, is that security tokens, because it's based on a blockchain layer, may not actually trade and settle faster than traditional assets, given the considerable lack of speed that certain public blockchains struggle with. So I'm wondering, is that an important consideration for financial actors who really do care about getting things settled quickly and done faster? Is that one of the barriers and perhaps one of the disadvantages to security tokens?
So straightforward, no, I don't think it is.
No?
So if you look at the securities space or the capital markets today, like the reason why we have T+3, T+2, which I believe SGX went to recently for settlement, it's not a limitation of technology. Securities take time to settle because we want them to take time to settle. There are processes which you must go through in order to settle these assets, make sure I have the cash to trade for these instruments. Yes, blockchain offers the promise of integrated or instantaneous, or whatever you want to call it, DVP, where I can perform an atomic swap and I can switch asset A for asset B. There's no risk of failure. If A doesn't settle, B doesn't settle. That's really, really interesting. That's really unique. But that doesn't mean that we want that for every case. And so while blockchain does, I've been in this space for 3.5 years, specifically working with enterprises, the pitch of near real-time settlement or near instantaneous settlement, while sounds great to a technologist, no one really wants that in the traditional capital market space because there's too much going on that has to go through process before settlement can occur.
You mentioned nobody really wants that in the traditional markets. I'm wondering, Peter, do you agree?
So I think...
Is that true?
In general, I agree with Darren. So if you look at settlement, right? So settlement is a very poorly understood concept in many of the new emerging fields because it's complex, right? And
explain it to us.
So when you want to settle something, you actually novate rights and obligations, right? So if you think about settlement, and what Darren says is true, there are certain asset classes which you can settle instantaneously. For example, like things that trade on a standardized contracts that trade frequently with high liquidity, stocks and shares. Possibly you could, but why would you want to? For example, if I wanted to short the market and I wanted to sell something I don't have, which is a common market strategy, I can't settle T+0. I don't have the asset. I have to make the deal first and then go look for the asset and then settle it separately. So certain contracts, especially we have commodity contracts that takes days to settle because the delivery takes days, right? It's not as if you can novate the deal at the point of trade, which means legally you have made the transaction, but to actually transfer the asset takes time for certain assets. So we can't just blanket apply and say T+0 is the holy grail of blockchain. I can do T+0 today in my settlement systems if I wanted to. It's not impossible. I don't need blockchain technology to do T+0 settlement, right? It's something that I think was brought about because of some of the frustrations with the long settlement times, some of which is true, but the overarching concept of settlement actually follows the asset class. So whatever asset class you're trading, whatever the customers need, whatever they feel that as part of their business process or opportunity, that kind of settlement, if it takes 1 day, if it takes 2 days, if it takes 10 days for physical delivery, then maybe it takes 10 days. Maybe it gets efficient, maybe over time ships get faster, planes get faster, supply chain gets better, it becomes 2 days. Maybe that happens, but it's not a function of technology. I don't think it's all about the technology. It's about whether you can meet your customers' needs and whether we can function as an effective marketplace by giving market participants the ability to transfer risk, the ability to enter into positions, the ability to make some money. You know, these are things that market participants want. It's not so much, is it blockchain, is it DLT? So I think that's the perspective that I would like to share.
Speaking to the innovations, though, specifically in blockchain, and speaking to that 2.0, the exciting aspect that you were kind of alluding to, Julian, are there innovations in the blockchain protocol layer, given that we now have a diversity of not just Ethereum, we've got R3, we've got Hyperledger Fabric, innovations for the 2.0 future that you think go beyond blockchain as a settlement layer? Or enhance blockchain as a settlement layer, if that's...
We come from private markets, so I don't have too much to comment on whether it dramatically helps or changes or is needed in public markets. Private markets, certainly a dramatic improvement as an operating system versus the paper system we have today, where you're signing contracts and a couple of weeks later you're trying to chase the money. And again, if you want to do a secondary trade in a private equity deal, if it even happens, it's months and months of paperwork to make that happen. So I think any efficiency improvement in that whole industry is good and valuable. I think one of the core misunderstandings from a lot of the private markets world was, again, every STO that started was on Ethereum. We have enterprise Ethereum and we have public Ethereum. Most people don't know that, so everyone was like, there's no way in the world I'm issuing my security and broadcasting to the world. Makes absolutely no sense to everyone in Raffles Place and Wall Street. So, you know, we've had developments, as you said, of groups like R3 and Corda developing distributed ledgers, private blockchains, taking the benefits of the public blockchains and marrying it with the necessary requirements of the issuers, whether that's who can see the transaction or if we're all in this distributed ledger, but I sell to you, it's just you and me, these guys don't need to know. That's great. So now that's come to the table. So this is why I think we now have a lot more people who are willing to do something from an issuer's perspective. And again, coming away from, everything has to start somewhere, but coming way out of just these startups. And that, again, the quality, it's questionable if there's any value in a startup on day one. So there's not necessarily the need to bother doing all this STO stuff, just do a convertible note. But again, as these other companies, bigger projects, there's certainly just so many problems or sticking points with how it's done today. I mean, if you think about a typical private equity fund, it's a fixed life fund, 7 to 10 years, typically, and that's it really. And it's the same vehicle we use in cyclical asset classes. It means half of these vehicles are going to harvest and lose money. But because you raised money from your investors based on a 7 to 10 year fund, that's just the deal. So with these new STOs and DSO structures, you can completely change how that works for the benefit of both sides and completely change the compensation structure. So it's already here, it's already happening.
But so I do agree that permission blockchains is a new innovation from public blockchains that has had such a huge impact on security token offerings. I'm wondering, what's the next big innovation? Now that we have these different types of blockchains that enable some amount of privacy, greater speed, what's the next innovation in blockchain technology, and what asset class, what type of asset is that innovation? What are you guys hoping that it will enable and better support? Darren?
Sure. I mean, to me, I'm short-term thinking, still looking for, in the short term, I still think that blockchains, especially public blockchains, are suitable to low liquidity assets. And so private equity, things like infrastructure, projects where today you require big upfront investments, but perhaps those investors need a little bit more liquidity to move out of those positions. So we have a couple projects in this space as well. In the infrastructure space, a group of guys, really sharp dudes out of Hong Kong, working on tokenizing infrastructure projects, hoping to help build up infrastructure all across Asia. That I think is an interesting asset class. You've got people who are going and trying to tokenize art, basically allowing people to invest in individual works of arts or batches of works of art. I think that is interesting. I think I think ultimately, again, if I look at from a low liquidity asset perspective, what's more interesting to me is the market forces that are driving it.
Okay.
I like to imagine it kind of like there's now a long tail of investors who can potentially invest in these assets, who may qualify to some extent. Maybe if the accreditation requirements are relaxed a little bit, if these assets meet certain requirements, they'll actually allow a longer tail of investors to put smaller and smaller amounts of investment into different vehicles. And so to me, especially in these low liquidity spaces where historically you have to have huge budgets to get into them and huge budgets to invest in those portfolios, now you can start to open those up to a broader group of people while maintaining some liquidity.
Gotcha. I do want to touch on market actors, but before I do, Peter, anything to add there? I mean, Darren just said with public blockchains, he does believe that these low liquidity assets can well be offered and promoted and offered and traded. Do you see any innovations in blockchain protocols that needs to happen to support a specific asset class that you think could benefit a lot from being digitized and becoming a security and offered as a security token?
Okay. I'll answer it this way. I think that there's a lot of innovations out there, which I won't comment on specifically. I think by and large, I agree with what Darren's saying in some areas. I think a lot of my work would center upon how do you make a DLT network more secure, more stable, and more reliable. And that is the direction of work that me and my team will be putting some effort into, which is things like investor protection. How do you make sure that whatever you issue on a ledger is secure? How do you make sure that all the exception handling processes, which is what we do as an exchange, how do we protect the interests of our investors? How do you make sure that if there's an error trade, for example, what do we do? What are the operational processes that need to be in place for recovery?
Yeah.
So things like that, I think, as a regulated exchange, we worry about this all the time, right?
Of course.
And to us, people use our services, people come to us because they trust us, right?
Yeah.
And it's a business of trust, and trust is not the same as risk. So it has to be really worked out from a platform perspective before we can really, some of these assets, before it can go mainstream, I think we as part of the market ecosystem, we need to be able to demonstrate that it is secure, it is, if you put your assets with us, we will guarantee them to such an extent that we could, as far as we could, based on the existing policies we have, such that you will come back to us and trade that asset. So I think that's something that I think hasn't happened a lot in the digital asset world. The trust isn't there yet, but maybe it will come. So I hope that it will come, maybe. But I think the work that we in this space, I mean, if we all want the same future, we believe that there's this emergence of a tokenized economy should happen at some point.
Yeah.
You can see that the public investments were made in CapBridge and iStock. So we're experimenting in a serious way, but we think that there's still some ways to go in terms of securing the interests of our investors.
Gotcha.
Things like that.
Julian, is the trust there?
Yeah.
Is that something that you see as an innovation that you'll be looking forward to for 2.0 Investor Crown? Is it trust that you guys are drilling down into and want to see more assurance of for your clients, or is it something else?
Well, the trust will come at who's the issuer and where are you buying it. So that's got
Not really
nothing
the technology.
It's got nothing to do with the technology. So that's why, as much as I love decentralized exchange land, trading security tokens on them seems quite far away. Any issuer needs to know who owns their shares at all points in time, and et cetera, et cetera. So yeah, so the trust comes back down to the normal things that are required when you're assessing a security and where you're going to buy it and make sure that it's safe. So technology is certainly going to help with that, but investors just care about the investment and what they're getting and what they're going to make. They don't care what protocol it's on. They don't care about any of that at the moment. And they might stay that way for a while.
Yeah, I agree with him.
Yeah?
What I do, if I do it right, it should be transparent to the investor. If I do my job right, if I give them a platform, they would come to me because they can make money, they can transfer risk. The technology, it's my problem. I have to solve it.
Gotcha.
Yeah.
And final kind of bullet question, what's the market actor that you think is going to be the most important to look out for in gaining security token offering, greater adoption for security token offerings? The type of market actor that you guys are thinking is going to have the most important role moving forward?
I think it's just the brand names, big brands launching projects, just like JP Morgan launched their stable coin and everyone on Wall Street thought it was that. So it's branding. It's branding from the big names.
Gotcha. Peter, Darren?
I agree. I think it's the existing institutions, because if you're looking at the people who are interested in investing in STOs, they're not crypto investors. They're traditional investors, sophisticated traditional investors. Know a little bit here and there about technology, but so who they trust, the JP Morgans, the Goldman Sachs, those guys, I think they can make a big push.
Of course. Peter, I wouldn't suspect that you have a different answer given your...
And the SGXs.
Yeah, I think, well, yes, I think brand is important. I think in capital market space especially, we spend a lot of time, a lot of the work we do is about our brand, right? So it's about making sure that people trust the brand, and you come to you would go to an exchange because you know that they would guarantee the trade, right? So I think these things are important. I think I generally agree with my fellow panelists on the points. We all want the same thing.
Yeah.
So, and there's a lot of work ahead of us, so we will get on with it.
Better trust and brand names. Thank you guys so much for listening. Thank you to my panelists.
Thank you very much.
Thank you.